S&P still struggling with that 4150 level. We're going to go through why we're seeing that happen and what we're going to do about it, how to act on that. More importantly, the Nasdaq actually popped over a key level today. This is based upon CPI coming in better than expected, and we're going to get into those numbers and drill into them pretty clean. And then we're going to just take a look and watch where we are for support and discuss this. We're going to talk about which sectors are leading right now. We're going to talk about which earnings disappointed after hours, what to expect from PPI tomorrow. We have a lot to go over, so we're just going to jump right into it tonight. As always, subscribe to this channel, click all notifications, especially if you're looking for actionable intel that you could utilize the next trading day. That's what I try to focus on here. I think we do a pretty good job on it, and I'm always open for comments, and you can tell me how it can be better. If we take a look at the Nasdaq futures NQ, this is probably the cleanest way to do this. We can see right here, this is your control bar, and this 13.1, that's been an issue. Now, what happened today, and we went through this on the pre-market live call, is we needed to watch 13.35. Now, there's a couple key levels here that are of importance. Number one, this is when we were on the pre-market live this morning for those that listen every day. And you always mark the top of that bar, meaning the close, and you also kind of want to look at where the top of that bar is too. Just drop a line there and you can see the significance in both those numbers, the close and the top. And the reason for that is because that is where you had the buyers finish that bar out. And of course, this is where the algos stopped. So when you start flipping those levels, usually they become support and resistance lines, just like they're doing right here. I'm sure you can see that, but we can just zoom in on that. You can see the significance of those two levels as the day played on. Pre-market, close of the first bar, high of the first bar, 1 minute. And again, you can see the significance of that and how those levels were pertinent during the day. That said, 13.35 was the level we wanted to watch. And they kept playing around with us, breaking us down, lower lows, lower highs, undercut here because everyone's saying that the government's going to default on debt. You can timestamp this. We will not default on debt. And it has been rumored that we're going to default on debt probably 10 or 15 times in my lifetime of trading. And you know what happens? We never default on debt. So if we take a look at this and we watch how this is going on, we can see those key levels. Now, what is this telling us? Well, it's telling us a couple things. Number one, CPI was very good, and it was better than expected. Now, the numbers in front of us for CPI, this is what JP Morgan said was going to happen if these numbers come out and what they're going to be. Year over year, the estimate was 5%. We were looking for 5% or greater. So if you have the probabilities right here, and what's important about this are a couple things. Number one, 4%, 25%, 50%. According to JP Morgan, 5 or greater, you were at an 80% chance of that happening. The way they did the math, 79%. So they were saying there is a 79% chance you're coming in higher than 5%. That's not what happened, and I'll walk you through my back envelope on how I said this last night, how this probably was not going to happen, how we were probably going to come in under 5. And I'll just walk you through it so you can do it yourself. It'll take you a couple seconds to understand it. So if you see these levels right here, you can see what they were suggesting was going to happen with the move. Well, they nailed the move. I mean, that's exactly what we got today, right? We got a fairly decent move on the S&P. And, it was around that 1% level. And that's right around where they were. But the important thing is they were predicting a 21% chance that you were going to be better than 5%. Therefore, anybody that is listening to JP Morgan that is an institutional client, and quite frankly, Goldman had the same thing. If you are an institutional client and you listen to them, you are out of position this morning. That's very important to understand. You are completely out of position. So that is why when you dipped today, you saw buying, and we're going to get into that now. So let's just walk through this. Here we are at the 830 level that we talked about, how you want to mark these levels off so that you can just see if they are levels of interest later in the day. Isn't that something, how you're just sitting there, and here you are here as well. And again, I did say 1 minute, so we'll just drill into this and make sure that we're right where we're supposed to be. And there we go. That's a little cleaner, isn't it? And we can see how both those levels are significant. and played throughout the day. Now, the purpose of me showing this, and we're going to flip this to a 5 so we can drill in. The purpose of me showing this is look at what we did all day. Look at how the S&P reacted. Well, all we did was just have these patterns, right? Lower lows. And then everybody saying the same thing. Oh, that's it. We're definitely going to have a bad day. I knew we were going to break. The market's going to crash. They're going to default on their debt. Blah, 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 blah. What happened? Right? We undercut the low right here. They get all that stock that they can get from people. And then what happens at 140? It usually happens around 230. I always talk about this time in the Alpha Chasers community. And what do? We rip. And where do we go? We go way over the pre-market levels and we close over 4150. Now, this is not acting as well as the Nasdaq, and we're going to talk about why. Now, I talked about the decrease in energy in last night's video, and all these videos are connected. But what I really want people to take away from this, looking at these videos and watching these levels, is all these videos are connected one way or another. But if you take a look at energy, energy is going to come down. Energy is an extremely large component right now of the S&P. You have this waiting on you. If we take a look at XLF, okay, does that look like it's helping? Right? So that's not doing anything to help the party right now, right? That is being a weight. So now I have financials and I have energy waiting on us. Now the problem here is I need financials. I need them to, they don't have to lead, but they have to at least follow and go up. And that's not what we have. Now, here's where it gets interesting. So we go here and take a look at the Qs, and we take a look at that Q performance in regards to the SPY. Well, here we go. This is exactly what you want to see. So I talked about this again yesterday, but relative performance is significant. What happened today is significant. So when we have runaway bull markets, and I'm not suggesting it's going to be anything like this. The Fed injected $1.7 trillion into the market. So if you want these returns or you did well in this environment, just understand that your trading strategy, it needs $1.7 trillion to be injected into the market in order for that strategy to work. Okay, that's why the strategies that people used here are not working now. Okay, this is never going to happen again. I hate to be the wet blanket, but we can still flip, we can still push, and that means that the Nasdaq can go and we can have a bull market. That is a possibility, right? Now, we want to flip this level, and now we're going to talk about what the drivers are going to be and what is going to be lifting us up. So here we are right at that key level, and if we take a look at this close right here, we get a close of 78.78. What is this close? 78.75. So we don't have exactly what we want just yet, right? With the closing, we don't have a higher high close yet. We're darn close to it. And if the Nasdaq continues to outperform, we're going to break this neckline, which is exactly what we want to see. Now, the SOXX, I like the SOXX to lead. The SOXX is not leading. Okay, so what will happen is that the SOXX will lift and go with the Nasdaq as money goes into the Nasdaq. Everyone's heard the saying, a rising tide lifts all boats. The SOXX will go higher. A couple caveats, I have positions in semiconductors and I have positions in the SOXX and SOXL. So you're looking at this, and I don't have this as leadership. Okay, so where's my leadership? So then I start going through it and going, well, IBB. Okay, well, it's not falling apart, but I really don't have leadership. You go into XBI, right? Well, now we're starting to get somewhere. We're seeing diversification in leadership through XBI, and XBI is trying to break out here, right? IBB is more weighted biotech. Biotech XBI, that is not as weighted, meaning that there's more names there. And here we go. Look what's starting to try to break out of its range. Now, whether or not this goes, excuse me there. Now, whether or not this goes, that remains to be seen. But that's one heck of a DTL. DTL stands for downward trend line. And you see that right there. Okay? So I want to watch this, and I want to see how this plays out. And then we're going to go from there. But this might be leadership, and it could pull other names up. What I really want to see, I want to see names like ASML. I want to see them break out. I want to see them go higher. I have all my little levels marked off here, my little DTL. I want massive participation. I'm not getting it. So I have to make some decisions, and I have to take what I can get. The way that I'm looking at it when I look at names like Lam Research, so we were talking about this when it broke the DTL back here 2 weeks ago. Now we drill out and we drop the line here. Well, we've got a couple things going. First, we both know I can draw that a little bit better. So we're going to drop that down right there, and then we're going to go from there. Make sure you get the newsletter. They're starting to come out again. They were on hiatus for a little bit, but the past two have gotten pretty good reviews. And it's free. It's in link in description. And it's a great way to stay abreast of things. So if you look here and you watch the flip, right? We're there. We're getting there. Now, if you get above Lam Research, start getting above here. Well, I want to see Lam Research participate because they're pretty big in the sector funds. AVGO, I'd love for them to participate. So I don't want just the AI names to participate. Although I'm going to tell you this right now, to me, I really like NVIDIA here. We've been batting this thing around, getting stopped out, getting back in, making money on trades. But, overall net this year, it's been a positive. But, trying to catch this has really been trying to catch a tiger with a tail lately. And if you take a look here, again, I have a position in this. Okay, didn't break through the first time. Here we are the second time. So it's very rare that you're going to reject here. Now, if you're a position trader, that's your stop. There's your whole trade mapped out if you're a position trader, okay? That's your whole trade mapped out right there if you're a position trader. If you flip this level, and I do think you're going to flip that level, so you can time stamp the statement and make fun of me if it does not happen. And I think we're heading back to highs. That's what I think we're heading towards. That's my opinion. I have no way of knowing what's going to happen. I do not have a crystal ball. But we're starting to see inflows. Rising tide lifts all boats, guys. I can't be any clearer about this, okay? This is something we have in the Alpha Chasers community. Been in and out of it. What they're doing is the exact opposite of what they did to us last year, okay? See where you are on earnings and how you acted, and then they gapped us down, and then they ripped it. See how they got us out before earnings, and then they ripped it, right? Same thing over and over again. Shaking the tree, and then it rips. Even here, Goldman was out there saying that sales were going to be bad. Now we're breaking out of a flag, okay? That's actually another trigger. We're in a little cheaper in the trading community, but now look at us, and look at what's going on. Now you're breaking out. So you're going to look at these names and starting to see massive breakouts. Now, CRM broke out. Maybe it comes back down, retests. I like this name. I did not like this doji. I'm not a real big fan of let's just buy the doji and see what happens. And a test back would not be crazy. But this is irrefutable what's going on here. And we're seeing it and we're moving. So even let's throw this in. And let's make this a 200 on snow. And I'm trying to focus on the name so you can kind of get an understanding of what's happening here. And I'm going to drill in the cloud and IGV in a moment. And I think this is more important than me just going over macro tonight. So if you take a look here, well, you flipped. Okay, we can say anything you want. That's a breakout, right? 157, you have broken out. Here was your doji. Here was the day before. Here was the close above the doji. So what did you have to do? You had to buy going in the CPI. They're making trading very hard to position yourself. Very hard. So then what are you going to do? You're going to buy up here after you just had this massive move? No. You're going to have to let it settle down. And then what happened? You didn't get a chance for it to settle down. So next level, we got to watch and just see how we act at this 176. Not really my spot where I would be getting involved in it, but I like this. And this Z-scaler, I don't have a position in this. They raise guidance. There's the doji. Flip the doji. This is getting stronger. I want to be real clear about that. This is getting stronger. Where AMD today, okay, that looks a little toppy to me, and we could probably come back down a little bit. I don't feel that way when I look at Z-scaler. Look at that. Doji flips the doji, gives me the wonky bar that makes me think we're going to break down, right? Ahead of CPI. What do? get me up, and then just rip it. Okay, that's what I'm saying. Lots of gamesmanship out there right now, guys. And this is the kind of stuff we're seeing. So where are we going with this? Well, a couple spots. One of the key sectors we talked about yesterday was watch XLY and see what's going on. Seeing the breakout of Amazon, right? Trying to break out, I should say. But here we are again. We are above the 200. Now, what I would like to see here and what I'd like to focus on are a couple things. So I'm going to just drop this into a 55 and we're going to look at that. Okay, so we're above the 55 and we're above the 200, but we're not crossing yet. Okay, I like my little crosses. I don't have that yet. But you're seeing money go into this. Now, we really have not had this pattern where we got above and we collapsed, above, collapse, above, collapse. Well, we're back at it, right? So this is pretty interesting. And I would watch and see if we flip that 111 tomorrow when you come out with PPI. Usually PPI is fairly decent if CPI is decent. We will be live for it tomorrow if you'd like to watch when it comes out. We actually will live trade it. The reason I'm bringing that up is a lot of people think that it's separate, but just think about it realistically. If you're a company, you're going to pass your costs along, right, to the consumer. You're not going to eat your costs. So PPI, just think of it that way. This is pretty interesting to me. Now, another one that I had a position in, and a bunch of people were trading it in the room. Look at that. Look what I got today. So I got that going for me. Got a golden cross. So if we see the golden cross, right, that's definitely something we should pay attention to. Come across here, bonk, 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 and then it rips. Okay? We've been fighting. Now what else is in XLC? Meta. How's that going? Not great. Okay, so Meta's not really going great. We're still struggling with that level right here. Okay, well, let's go take a look at XLC. I'm not through 60. This is my big problem. I don't have real leadership. Now, we could see leadership, and we could see leadership start to come through. And one of the areas that I'm thinking that we might start seeing it is in these IGV names. So we have the golden cross back here, came back, retested, tested the 55, and now we keep pushing, right? Flips, if you really get super technical, you have a W right in here, and now you closed above the W. Volumes above. So you can go look at the IGV names. Think CRM is in there. Oracle's in there. Some of the legacy names are in there, right? Oracle looks like it's about ready to rip people's faces off. And that's pretty rare for Oracle. You know, the best time for me when I trade Oracle, candidly, is the day after earnings. They always trash it. Always, right? And then you just step in, right? And I mean, it's constant. But, I mean, here it is again, breaks down, right? And then people buy it. Now look at it. I don't usually do well buying these breakouts. This might be different because you have so many people that are short the market. You know, and I'm going to say this. This IEP I have a position in. Okay, I know the conference call didn't go the way people thought it was going to. I got to be honest, I really don't care. I'm getting $8 a dividend, and he's out there buying stock now and on his buyback. So I'm going to let the trade play, and I'm probably going to continue to build a position in it. I got to read everything from the conference call again and pay more attention to it. But I want to go through something that he said. Forget about what he's doing, but he is one of the best investors in the world, been at it 50 years. His track record is top 3. I've said this several times on this. So Hindenburg has a very valid point about the NAV. They have a very valid point about it. But he does own 85% of the company, and he's out in the open market now buying, I think, the next 5%. So he can pretty much do whatever he wants. Okay? And the way the company's structured, I would suggest people look at the structure of the company so they can understand the corporate governance and the problems that Hindenburg pointed out with corporate governance really don't exist for this kind of structure. But that's a time for another video. Anyway, so if you take a look at this and you see how you're wedged in here, right? Now, that's not ideal. You read the conference call. He's out in the open market buying a stock. What he said today about the market was very interesting. And I think that there's some things in there that are not IEP related, but they are stock related. So here is the release. And I just want to go through some of this. He issued the following statement. Trashes Hindenburg. Shocker, right? Hindenburg trashes him. He trashes him. It is what it is. So they're big activists. They always were. I'm not going to sit here and talk about it. I think that we should focus on a couple things from this call, right? In more recent years, the performance of our investment segment has been lower than our historical averages, which it has. A key detractor has been our bearish view of the market, causing us to have a large net short position. We recently have taken steps to reduce short positions in our hedge book and concentrate for the most part on activism, which has served us so well in the past. We believe our existing portfolio has considerable upside potential over the coming years. Now, 1, he's going to talk up his book, right? 2, he's going to trash Hindenburg. Hindenburg's going to trash him. This is going to go to 20 or 50, right? The part you need to take from what I just went over is the fact that he's covering a short position in the markets. He's not covering a short position because it's working. He's covering a short position because he's wrong. If one of the top 3 investors in the world is wrong right now and covering their short position, what do you think the rest of the people are going to start doing? And they're going to start doing it later and later and later, okay? They're going to have to cover their short positions. And we have so many people that are net short this market that it is beyond staggering. Now, in front of us is the Hedgers Combo, all the people in the marketplace and how they're positioned. S&P, small speculators. Small speculators are hedge funds. Okay, large speculators are the pension funds of the world, huge pools of capital, and that is skewing the hedgers combination. What I want to focus on is small speculators, hedge funds, okay, specifically hedge funds that are net short. If you take a look at what has just transpired here and how we have fallen off a cliff with their net position of the market, it is one of the largest drops we've had since the pandemic. Okay, they are net short. If the Nasdaq keeps pushing and we're getting through key levels, and it's really important to get this tight, right? We've been in this range. We talked about this, right? This has been the range from April. And this is really important, guys, to pay attention to this part. Here you are from April. Okay, that's your range. Okay, April to May. So if you look at that as your range, and then you go back and say, well, what was it from March on? Okay, and you realize that from March on, let me get to it so you can see where I'm going with this. Here's from March on. Okay, look at the range in the Nasdaq compared to now. All we've been doing is going sideways, riding a line and eating up supply. That's all we've been doing. Okay, and we basically just saw a number today that nobody was really predicting. We have a 20% chance that CPI was going to be that good. PPI usually follows. So comment below, but there's a lot in this video and you might want to watch it. If you find value in it, I appreciate it if you share it. Have a good night, everybody.